Good evening, ladies and gentlemen. Amit, guess what?
What?
We are live, in case you didn't know. I'm getting ready for the fights this weekend.
You're fighting this weekend?
I didn't say I'm fighting. I said I'm getting ready for the fights this weekend. I checked your favorite stocks app, okay? Robinhood prediction markets, and I'm ready. I'm ready.
Dude, we should get you in the ring with like someone
No,
who likes chocolate milk and you become the strawberry milk guy for the night and you just duke it out.
no.
That would
If I
be.
was younger, sure. No.
I'd pay for that. I'd pay for that.
I mean, I think a lot of people will have no interest in that. Anyway, big day today, but before we go on, if everybody pauses the screen and just reads the disclaimer, take everything that we say with a grain of salt. Amit and I do not know your financial situation, and anything we talk about solely our own opinions. Do your own due diligence. Don't invest in something because somebody else does. Please do your own due diligence. With that being said, big day. How'd you feel about CPI, Amit?
It was the best CPI we could have asked for.
Chris and I laid out the case on Monday night. I said CPI was going to come in low. Chris said it was going to come in low. It shattered expectations, in my opinion.
Yeah, I mean, every bank had 3%, came in at 2.6. It's a big deal. I mean, because it justifies the rate cut, justifies the momentum of Fed easing in 2026. And I mean, if inflation's coming down, it's really hard to be bearish into next year because that was the one thing the bears could say, well, rate cuts might not happen if inflation, but if inflation's down, it's a hard argument to make.
Did you happen to see where core was?
Core or core weave? Oh, you mean core CPI? Yeah, 2.7.
Yeah. I mean, the fact that core CPI fell that much also is a clear indication that when we get a new Fed chair, I think we're going to let's not get ahead of myself, but I think there's a real case for 2.75 or 2.5% by the end of next year.
I think that's what Trump wants. And I think he is decisively trying to make sure that that's what he's going to get. But if we get inflation down to 2%, there's not going to be a reason for us to have 3.75% rates. Like, it's not going to make any sense. So I agree with you. By the way, you're super choppy.
Yeah, I just got a text that I'm choppy. I don't know why.
You had this problem last time, but you fixed it. Like, I don't know what you did, but you fixed it.
Yeah, I have the smart firewall off.
Your audio is delayed too. It's weird. That's weird. It doesn't matter too much.
I'm getting annoyed, and you know what's going to happen? I'm going to get a second internet line brought in. That's what's going to happen, just for this computer.
It can't be the internet, bro. It's a live stream. Like, there's no way it's the internet.
I'm getting a second internet line just for this computer.
That's weird that the internet's causing that, but yeah, the visuals are behind the audio. It's not internet, right? I don't think it's the internet. I think it's something else.
So just so everybody knows, I turned the VPN off and the smart firewall is off. There should be no problems whatsoever.
Oh yeah, it's really not synced, bro. Like, you're like 5 seconds. We start hearing your audio before we see your lips move.
I'm gonna come out and I'm gonna come back in. How about that?
Okay.
If I leave the studio, are you gonna get kicked out?
No. Until you press end stream, it doesn't matter. All right, guys. Guess it's my channel for the next 5 minutes. Socialist New York internet. Time for Amit to entertain us. I entertain you all day. And now he leaves me alone to once again entertain. It is, I I don't know how to do this. I don't know how to do a live stream alone. That's weird.
This is unbelievable.
No, your video looks great. Let's see if your audio is good. I think your audio should be okay.
Is my audio okay?
Say something again.
Is my audio okay?
Yes, you should be good. Yep.
Okay, good.
You're good. Yep.
I am still getting a second internet line now. This is unbelievable. I'm blaming it on the internet, and a second line is coming in.
I don't think it's the internet, dude. I really do. It's something with StreamYard. Blame StreamYard. Don't even blame the internet.
No, I'm not going to blame StreamYard. StreamYard's been good tonight. I'm blaming the internet. I'm blaming Spectrum, and I'm bringing Fios in as a second line. Is what we're doing.
You know what's funny? I saw Tanner making fun of you last night because you can't work a Google sheet. I am worse than you when it comes to a Google sheet. I don't know how to I know like 2 formulas. I would have never survived if I had to use Excel for a living.
I'm actually amazing at Excel. I just didn't know that you could freeze a left-hand column. I thought you could only freeze horizontally, not vertically.
Bro, the only thing I know how to do is make sure the text is wrapped so that it actually fits in one box. I learned that shit 10 years ago. I'm like, I'm good to go. That's all. It's equal sum, add up the numbers, boom, I'm good to go. That's all I need. That's what I need, and that's it.
So I got to tell you, the Robinhood prediction market is amazing. Absolutely amazing.
It is growing. It's going to get more liquid. Coinbase just partnered with Kalshi. This is going to be a massive, 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 massive industry.
Massive industry, and I think DraftKings is screwed. I really do.
I think they're dead, dude. And I know that doesn't mean short the stock or anything. I don't understand how sports books are going to not survive. They will survive, but grow. Like if they're a public company, they need to grow year over year. This experience now with parlays is just way better. It's just way better. And so I think people are they're gonna transition into prediction markets to do everything that they were doing on sportsbooks.
I think we're going to see a big jump in prediction markets over 2026 because you're going to have Polymarket embedded in the jumbotrons at UFC events, and I think that's going to become a more well-known and more normalized thing. I think eventually you'll see it in football games at the football stadium. I think you'll see it on the jumbotrons at NBA games. I think it will become a more normalized thing.
Yeah, no, I think it will be. And again, there's no house. You're going against peers, which reduces a lot of the incentive in the VIG. There will be some VIG with market makers, but it will not be the structural VIG with sports books. And I think again, you get banned if you're too good. I've heard it over and over and over again. But prediction markets, they don't care. They're just collecting fees. So it's just a way better business model. And you can sell during the game. Like in a sports book, it's hard to get out. Like
some sports books do let you close for a certain percentage on the dollar, but I do like that you can actually see in real time how the prediction markets are moving without having to read a spread. And I got to tell you, I'm going to say it right now, and I don't care if people get angry at this, okay? The Jake Paul, Anthony Joshua fight tomorrow night, you can buy Jake Paul contracts for 15 cents. If he wins, okay? If he wins, this should not even be close. No disrespect to Jake Paul. This guy has done what nobody thought he would do. He went from being a Disney person to a legit fighter with boxing, okay? Anybody says he's not legit is crazy. But this Anthony Joshua, if he wins this fight, you're going to see me come out with the biggest tinfoil hat ever. That's all I'm going to say.
I don't know much about boxing or Jake Paul, so I'm not even taking any side, but it's going to get a lot of volume, and that's all that matters for Hood and Polymarket.
Did you see the weigh-in by any chance?
Yeah, I think he pushed them a little bit or something.
Dude, Joshua weighed in at 240 and a half or something like that. And Jake Paul weighed in, I think, 216. Joshua's going to come into that fight tomorrow a good 50 pounds heavier. And It's not fat. Like this guy, Joshua's a monster.
So Joshua is like expected to completely knock him out, type of thing.
Joshua is a legit world champion.
So this is going to be his toughest fight ever, basically.
Oh, without a doubt.
Mm.
Without a doubt.
15%. That could be a 6x if you get it right.
I mean, if this goes past 2 minutes, I'll be shocked.
Really? You think it's that? Wow.
By the tape, like just the tail of the tape, yeah. If this goes past 2 minutes, I'll be shocked.
It's on Netflix, right?
It is.
Okay, so everyone's going to be tuned into that.
Oh, tomorrow night, it's all people are going to be talking about. It's just, I mean, this guy, Olympic gold medalist. I mean, he's a monster. That's all you can say is he's a freaking monster. You know. Anyway.
Yeah. Again, these events are just going to be cultural moments, and Hood's going to print on the volume for this.
Yeah, I mean, he's been in. I'm looking at his fights. I mean, he freaking fought Klitschko. Like, did you see the knockout of Francis Ngannou by any chance? I don't even think I can show it on this. But if you look at what he did to Ngannou last year, I mean, just watch it on your own right now. And Francis, it was, he's not a good boxer, but huge neck, solid neck, way bigger than Jake Paul. Joshua basically took his freaking head off.
Yeah, I have no idea who this guy is, but I would imagine Josh is probably better than Jake Paul, because Jake Paul usually fights people who are like a joke.
But I'll tell you what, I think Robinhood is going to benefit immensely from this tomorrow. As I got to tell you, I'm starting to really buy into this whole prediction market thesis. And I think that eventually we're going to see way more money wagered in prediction markets than with traditional sports books. And I think Robinhood is going to take a huge piece of the pie. And I'm very excited for Robinhood shareholders on this. I think this is big.
The problem is everyone thinks it's gambling. So the brand perception is the pushback they've been getting. Which, even if it is, like, all right, they're going to offer it.
Technically, it is gambling.
Yeah. So they're leaning into it, though. I don't think they.
Technically, investing in stocks is gambling, too. But
you have a lot of. If you said that to Tanner, he would push back. He does not believe in that at all.
Well, I can make an argument that if I buy some contracts on Anthony Joshua right now, I'm investing my money because the outcome is I will be making more money. And when I invest money into Apple, I am investing the money with the hopeful outcome of making money.
Yeah, but this is a binary event, whereas Apple.
Sure. Is a same date option gambling or investing?
Well, options, you could make that argument, but like actually investing in stocks.
Just saying.
I agree. I don't think we have to get that semantic about it, but I agree. But most people don't want to hear that.
No, nobody wants to hear it.
No.
I can't control the outcome on Apple or sports. Out of my hands. I don't know what they're going to report, but I really do think Robinhood is at the forefront of this. I think this is going to be huge for them. And I'm starting to feel like I want SoFi to get involved, even though I don't. Like, I'm 1 foot in, 1 foot out on SoFi getting involved in the prediction markets at this point.
Noto's not going to do it.
I don't think Noto will do it.
It's too dicey for him to get involved.
You know what I'm a little shocked at? Noto going on some crypto podcast. They got like 900 views. A crypto podcast that has like 16,000 viewers. Why the hell didn't he go on your stream or Tanner's stream?
I don't know what's wrong with SoFi. And by the way, as I own SoFi, so no one say I'm bearish, yada, yada, yada. I don't get what's wrong with that management team. Like, I genuinely
does not
think
make any sense to me.
From a media perspective, they're stupid. Like, let's just call it, from a media perspective, they're really stupid. Because
let me interview them, since I've been writing bullish articles on them since 2021 or 2022, whenever it was.
Well, that crypto podcast is a great podcast. Vlad's done it before, but Vlad's done a lot of other podcasts,
right,
with people that like also care about the company. The fact that Noto has not given Tanner the time of day is so, like, it makes me not want to invest in SoFi every time I think of that. Like, it's really annoying. And I don't think anyone can justify it other than when Noto's, I don't know, Noto's intimidated, scared. He doesn't want to be talking about the company. Like, what's the issue?
He needs to loosen up, is what he needs to do. He needs to loosen up.
Oh, well, why wouldn't he talk to Tanner? Like, what's the argument?
I don't know.
I mean, like, you come to a couple conclusions, and one of them is like he doesn't want to talk to someone who actually analyzes the stuff. Like, has he actually talked to someone who knows about the company meaningfully? Because Andrew Ross Sorkin and Jim Cramer doesn't know about SoFi.
Yes. So he did, and this is what annoys me a little bit. Jordan, I'm going to butcher his name. I apologize. Or not Jordan. Jonah, you know what I'm talking about. Lumphill, something like that.
That was years ago. A long time ago.
But once again, he did his show, and that's the only time I saw him talk with somebody other than a CNBC or a Bloomberg or a Yahoo Finance.
Dude, it's so stupid in this day and age to not talk to the people that are passionately covering. And don't give me it's unprofessional. Like, get out of here, bro. Freaking Jensen's talking to YouTubers. Like, it's it's just stupid. That's all it is. And there's no way to justify it. Now, I still own SoFi, and I really do think it's undervalued here, but that stuff always makes me question, like, do they actually understand the new age that we're in, or do they just think BlackRock buy their stock?
It's funny because Liz does risk reversal media show all the time.
Liz is not the CEO of SoFi.
Yeah, but it's different because they're on CNBC together, but they're not opposed to doing podcasts. And look, I would rather see him on Tanner's channel or your channel than mine personally, but
he's not going to come on my channel, but he should give Tevis and Tanner the time of day.
I agree. I don't think he'll come on mine because I'm going to press him on things. Like, I will not let up on business banking, wealth management. Like, I will not do it. I'm bringing it up. AWS, a fintech, I'm bringing up. Like, I'm not shying away from that stuff because those are the two things as a shareholder I am most interested in, because I think that we need to be moving quicker in those vectors.
So the guy, he's a CEO of a bank, guys, can't do what tech CEOs do. How, like, have you guys seen the places Jamie Dimon has done podcasts on? Like, what are we talking about? There's no way to defend it. I'm sorry. There's no way to defend it. You cannot say he's a CEO of a bank. Like, who cares? Like, what? Like, yeah, okay, Tanner will record the conversation. It'll go through the freaking legal stuff. Like, yeah, that's fine. That happens in tech companies too. It's not like we have to do a live stream. But the idea that he doesn't sit down with his biggest supporter over the past 4 years, it's not like Tanner's done anything to piss him off, I would imagine. Tanner's not even been super biased, positive or negative. Tanner's just analyzed the company. You have to have respect for someone who's just analyzed it.
Yeah, I mean, I don't think that I've been wrong the times that I've questioned their commitment to certain aspects of the business. Now, I'm not on the same page as everybody else when it comes to the direction certain things have been going. At the same time, I'm one of the longest running bulls when you look at this, 2021. And you look at how many articles I've written about this company, I may know a thing or two about the company. And if you look at the trend, every single one of them is very bullish. Actually, except for these two, because I started getting to the point where they're not delivering on certain things. But I'm back in the camp, and it's 30-something articles now, 32 articles since 2021.
But, like, look, their execution has been amazing. They're diluting, and they're probably going to be using that money for something accretive. Like, I think most retail investors don't even care about the dilution. The rate cuts are super bullish. They're going to probably do 80 cents of EPS. Like, everything's going in the right direction. And Noto has a ton of incentives waiting for him in PSUs. Why wouldn't he just talk to his biggest supporters? Like, it really comes, and I don't know, maybe I'm reading too much into it, but it's like, as a human, it's just weird. They freaking hire data-driven investing, and they can't talk to the retail community. It's so weird to me.
Oh, so I told Hager, and for those of Chris Hager is data-driven investing. I said to him what after he announced it that my only ask is that they have a shareholder investor day every year. That's my only ask.
That'd be
If
pretty
he can
cool.
get that done, I'll be very happy because I think it's so important.
That'd be pretty cool. But even 25 minutes with Tanner in a recorded, structured
Right.
podcast would be amazing.
I would love to see him on Tanner's channel. I would love it.
Also, Tanner would glaze him the whole time. It'd be such an easy interview. Like it would be Tanner would be so excited. It wouldn't even be that tough.
Oh, Tanner would be a kid in a candy shop.
Yeah, and the company's executing, so Tanner's gonna ask layup questions about
Right.
explain how well you're executing. It's a no-brainer.
Oh, I'm not going to make any fake promises. There's no softball questions if I talk to him.
Yeah, but you're probably not going to be aggressive in your tone.
Oh, no, absolutely not. And the things are legitimate questions. When is business banking coming? Why are we not having Liz Young head up wealth management and build that into business banking, take custodian of 401k accounts, pitch SoFi, ETFs, and mutual funds to companies for their fund plans, because most corporate companies only give you 15 or 20 funds you can invest in. So you get 2 sets of management fees. Where are the deals on the actual banking platform? Like, that's what I want to know.
And by the way, those questions aren't even that hard. I could already think
No.
about Noto would answer those easily. So, and for those saying Noto doesn't care about retail, one, I think that's not true. Two, I think it doesn't matter if he's going to connect with retail investors and get them to buy the stock or not. It's about just broadening the diversification of his distribution. And even if the Tanner podcast gets 5,000 views, which is probably going to get 50,000 views, it's just good for average people that pull up their YouTube that have some money in SoFi to see that in their face versus always appealing to the big banks. There's no downside to this.
And more expanding the brand exposure.
Yeah, it's very simple. This is not controversial or
No, not at all. He would be great on Tanner's show. He should absolutely do it.
Yeah.
But we'll see. We'll see what happens. I am starting to think that maybe they should get into prediction markets. I'm interested on Robinhood if they're going to put a slide in the slide decks in 2026 to show how much revenue is coming in from it, because I really do think it's going to be drastic how much revenue comes in. I think it's going to be huge.
Yeah, I mean they've already started disclosing the monthly contracts, so it's a $360 million business for them right now, run rate. Should be able to get to 500 million by next year.
It's crazy. So thank you very much, Sebs. Really appreciate it. Who has more upside over 5 years? I mean, I could spend a good 10, 15 minutes on this. Amit, before I say who, if you had to pick one of these, which one do you think has more upside?
Meta easily.
Easily. I have a big problem with Oracle at the moment.
I think Oracle will be okay. They have that TikTok news after hours, but Meta at 18 times earnings is, as long as Zucks doesn't really mess it up, which he's already messed it up enough with zero real ROI on the CapEx besides ads. I'm sure they'll figure something out. It'll be okay. And if there's no CapEx, then the stock goes to the moon because free cash flow goes up.
Yeah, absolutely. It's already dirt cheap on any valuation metric you want to look at it. The problem I have with Oracle right now is forget the debt, forget the CapEx. The RPO is so much more than Microsoft that it almost seems like a number where they would never be able to monetize all of that in the next 5 years. And to me, that's a problem. I mean, coming out and saying you got over $500 billion in RPO, how long until you start? How long until you monetize 200 billion of that, 300 billion of that? You've been behind on building data centers from everybody else. So I think Oracle's got some problems. I think it's going to be dead money for a little bit.
Yeah, I could see a rebound back to 210, 215, and it kind of stabilized there. But yeah, if it's Meta and Oracle, I think I'd pick Meta.
Die777, thank you very much. Thanks, Stephen and Mitt. Would love to hear your thoughts on the long-dated ITM covered calls.
The in the money ones. Yeah, so I called Steve about this. Again, Steve understands this really well also, but very simply put, you have a stock, you sell an in the money covered call, you're agreeing to sell it at the strike price plus the premium you're getting. And that means you're sacrificing the upside of the stock above the premium plus strike to protect against the downside. So the example I use is that if you have Hood at 120, you sell it in the money call a year out at 100, get $40 of premium, you're okay with selling it at 140. If it goes to 80, 120 minus 40, then you're protected because it's a delta neutral position for a 33% drawdown. And worst case, it falls 33%, you buy back the calls, and then you get and you keep the shares without having to actually sell them to hedge your position. So I think it's a strong strategy for those that are feeling a little iffy about next year, especially if you have a massive position. And you can collect some premium. Now you have to be okay with it. If Hood goes to 200 by February, the part of position you hedge is not going to qualify for any of that upside. You have to be okay with that. But if Hood also goes to 80, the part of position you hedge is not going to have to deal with all the downside. So that is at least what I did on my Hood position.
Yeah, when Amit called me about it, I said I think for him it's a good idea. I don't think it's a good idea for everybody, but knowing that Amit's going to watch it every day and stay on top of it, I think it was a good move.
Yeah, it's just the position is too big at this point for me to take the risk. And I really do. Look, it's a portion of the position. So I really do hope Hood goes to the moon next year, because even though some of it will be sold, a large chunk of it will be qualifying for the gains. But Hood's also an expensive stock at these levels unless they keep 60, 70% growth, which I don't know if they do if we don't have a massive bull run. And so if we do, then great. We get a lot of my position goes up and some of my position gets sold, and it is what it is. But if they don't, I don't get to see it completely fall apart, which it will, because it's, if Bitcoin collapses or something, Hood's going to get hit.
I think we're going to have a very good 2026. And I got to write this down. I want to ask you this because I don't even know if you talked about it today. We're going to find out in a moment. Thank you, Para. I am going to butcher this. I'm so sorry. I'm not even going to try to pronounce it. Stephen and Amit, why do you think Carp is so different than legacy-minded CEOs? Also, thanks for the stream, Stephen. I will go first before Amit gives you the actual answer. I think that Carp is just a very confident guy who understands things that other CEOs don't. And I think that he's so used to the legacy media and people discounting him that he could give a fuck and truly wants to embrace the people that embraced him. And I think that's why he truly likes talking to people like Amit and other people, because they're the ones that embraced him. You got to remember, none of these big firms embraced Palantir in the beginning.
No. Yeah, same answer. He respects loyalty, and he really does care about people that took their own risks against the herd. He's dyslexic. He doesn't like playing by the rules. Palantir's never played by the rules, so he likes the people that supported Palantir when they were in the gutter, and that's why he's different.
And I will also say this. When he says that he wants to make his shareholders money, I truly believe him. I truly believe he wants everybody that's been on the ride with him from the beginning to get wealthy. I don't think it's just a soundbite. I truly believe he really means
it. He loves the fact that individual investors have gotten very rich off Palantir. Yeah. I can tell you for a fact he loves that.
Yeah, I completely get that. Now, I want to ask you about Walmart. Did you see the news about Walmart?
No.
Oh, wow. Really?
What happened with Walmart?
Something that I saw today that you didn't, but kind of crazy because you see everything. I got to freaking, I don't even want to tell you. I want to bring up the video and watch it with you because you're going to freak out.
Okay.
Walmart CEO, it had to have been this morning he was on. So their CEO is stepping down, but there's a lot of things going on with Walmart. You know what? I should just go into my history to find it. I'm so stupid sometimes. I swear to God.
There is an art to finding a YouTube clip very quickly.
I got it.
There is an art to doing it. I think I've gotten good at it over the past couple of years, but
I would say you're the master.
I've figured out how to find shit very quickly.
It'd be nice if I could actually operate YouTube. You ready to hear this? I can't wait for your reaction.
Dude, I saw this video 2 days ago. What are you talking about?
This was 9 days morning. Oh, was this? This is 9 days ago,
dude.
Can we
get some L's in the chat? That's is
no good. They want to join the NASDAQ 100.
You thought that video? Yes, that's why they transferred to the NASDAQ. Of course, that's why they transferred to. You thought that was uploaded today?
I listened to CNBC in the car, and I thought this was on this morning because I was listening to videos from this morning. Steve, no brainer. Total L. I did not know that they were going to the NASDAQ to try again the NASDAQ 100, get the exposure, the fees, everything. Craziness.
But also, that's not even that crazy. I mean, like, you know, it makes sense. They want to be part of a tech-heavy index if they start embracing AI and stuff. So, like, it's bullish for them. I wouldn't buy Walmart.
Yeah, I don't want Walmart in the freaking NASDAQ 100.
Unless they can actually start showing some AI. Right now, growing at 4% is not enough, I think, to be the next.
Like, Pepsi is in the freaking NASDAQ 100.
Yeah, why is that a thing?
I don't want Pepsi in there either.
Bro thought we didn't see the news. I probably did talk about this 9 days ago when it came
out.
Yeah,
you probably did. I didn't know that this was 9 days ago because I was listening to it when I was driving, so I can't look at when this was. I just assumed it was freaking this morning because why would it be playing it for me?
The algo does that sometimes. What was I going to say? So I had a Wall Street Journal reporter interview me 2 days ago, and they're doing a piece on if the Dow Jones is relevant anymore. And she was like, do you think retail investors care? And I was like, when Trump tweeted the stock market hit a new all-time high live 2 days ago, last week, all of us were just like, he's wrong. No, it didn't. And then we realized 10 minutes later, he was talking about the freaking Dow. And so she started laughing.
People use the irrelevant now. People use the Dow as an indicator because of how big the number is. And even Josh Brown was saying, when is the Dow going to print 50,000?
Yeah, but no one really cares about the Dow. Like, none of us in the chat look at the Dow. We look at the S&P and the Qs. And she was just trying to understand why. And I was like, because why would we? It's the Dow, like Home Depot, Caterpillar, you know? So, yes, Trump should reference it and brag about it. But it's not what we care about as an old.
Have you looked at the companies that are in the Dow?
Yeah, I know the top 30. They got NVIDIA in there and Apple, but it's not something that would get people to really, or at least younger people to care. Like, who buys the Dow every week? Who DCAs into the?
Well, that's the thing. Nobody. Every freaking, I shouldn't say every. Most index funds are either total market or S&P. Yeah. That's what the most of them are.
Yeah, like I'm not buying the Dow Jones. If I'm DCAing for the next 10 years, it's S&P, VTI, VOO, or Qs. Dow will probably be fine. It's just doesn't get the attention.
I got to tell you, I'm firmly against VTI.
Why?
Firmly against it. Because I don't think small caps is a good place to put capital. I don't necessarily think mid caps is. And when you look at VTI versus VOO, VTI underperforms by a large margin. And it's crazy. Like, people love VTI for some reason. And it just breaks my brain.
It's down 10% over the past 5 years compared to VOO. Yeah, that's fair. It was just crazy because it's just so funny that because the Wall Street Journal really cares about the Dow Jones, and her whole piece is about like how no one cares about the Dow Jones anymore, which shows you how tech heavy the market is becoming.
Yeah, I mean, I want to show you the chart and everybody in the chat chart. I mean, over the past 5 years, VTI is up 84% when VOO is up 95%. So why would you want to be exposed to something that's underperforming by 11% over the past 5 years? I mean, it doesn't make sense. You get enough diversification with S&P 500, and you get a bigger weighting. Because think about it. as small caps move into mid caps, then mid caps move into large caps, you get the most amount of growth from companies going parabolic when they're in the S&P because there's nowhere else for them to go. And when they become bigger, they become a much bigger portion. I would not want to be in a total index fund. That's just me.
No. I'm going to start DCing SPY next year. I'm going to do it.
I've been telling you that that's a good move for you, especially with the way you can utilize options in it.
Yeah.
Like for you, I would say SPY over VOO only because of that reason. Traditionally, if you're not going to be doing cover calls or anything, VOO is better in my opinion because it's a lower expense ratio. But because SPY has daily options, I think it's better for you.
Yeah, in general, I should just probably start DCing into that. It's probably time to just throw some money.
I don't think it's a bad idea considering it's kind of a hedge against yourself and put you in a good setup for your future.
It's literally a hedge against me going crazy with my portfolio.
Yeah, that's how I look at the S&P. It's a hedge against you it's a hedge against me being stupid.
Yeah. Because like worst case, all right, you go 20% down in a year. The 20% down on stocks that all of us own, that shit happens every other week. Like 20% is like, okay, cool, 20%, whatever. It hurts, but it's like S&P 20% down year is like, we had a horrible economy for the S&P.
And if you're in high beta names, you're probably down 50% or more.
Probably more than 50. At this point, I'm convinced we see a 20% correction, 70 to 80% down on most names. There's just no way I think we avoid it. There's no S&P 20% down from where it'd be 5,500. Look at all our favorite stocks when the S&P was 5,500. It's 50 to 70% down from current levels.
Maddie, there's never such a thing as too much SPY, my friend. Never ever. Love SPY. Die777, thank you very much. What do you think about Palantir in 2026? I'm long for the long haul. Think it hangs in the 150-200 space through 2026. And it fills into the PE multiple. Appreciate you both. Happy holidays. And maybe why don't you go first on that?
Yeah, I think 2026 Palantir should stay in the 150 to 200 range. If there's a breakout above 200, it means we have entered ultra bull market, which is actually very possible in 2026, especially with the CPI we got this morning. If we don't get into that ultra bull market run, I think the street tops it out around 200, maybe 220. Like it's going to be hard for me to see 250, 300 next year, or unless Palantir executes at like 70, 80% growth, then that could happen. But if they stay at this 50, 60% growth, which that is phenomenal if they keep that up, 150 to 200 should be where it stays at. So yeah, I'm not that worried about hedging Palantir. I think you can, obviously, just based on market dynamics. I just know Hood is more volatile than Palantir because of crypto and this and that. And now Palantir has a big multiple, so obviously the multiple can compress aggressively. But I know easily how Hood falls apart based on market dynamics. And so that's why I thought about hedging it. But realistically, I do think 150 to 200 is that new support range. Although we did break below 150 when the S&P fell 5%. So theoretically, yeah, could Palantir go below 1? Yeah, it just happened. So if we have a 10% correction, I mean, yeah, Palantir probably falls much below 150.
Nothing would surprise me with Palantir. Their Q3 earnings was one of the best prints in any stock I've ever seen. It's arguably, before NVIDIA's print came out, it was arguably the best print I've seen in years from any company off of the business fundamentals, not profitability, not revenue, straight business fundamentals. The critical number that people gloss over is 134% net dollar retention, and they don't take into account any deals signed within the past 12 years. And when you look at the deal book for the past 12 months, they just in Q3 hit, I believe, 204 deals over $1 million. It's absolutely immense. And at 134% net dollar retention, that's a lot of forward momentum growth on that entire deal book next year. Now, the valuation to me makes no sense whatsoever. It has not made sense for years. That's not necessarily a reason why it can come down. it could very well stay between 150 and 200. I don't see it getting past 210 anytime soon. In the future, I think this is a $1 trillion company. I am just not in the camp it's a $1 trillion company in the next 2 years. I think it's going to really need to grow into this valuation. And I think, look, I've said it before, I'll say it again. I think it's overvalued, but that's not a reason it has to come down. Not with this momentum.
Yeah, and again, look, if NVIDIA falls 10, 15%, I mean, everything's going to... So that's the thing. It's like, if you're not ready for everything high beta to fall, we just saw the S&P take a 5% decline and everything high beta got destroyed. Like Palantir went from 200 to 147. Robinhood went from 140 to 100. Like we just saw it happen in front of Rocket Lab went from 60 to 38. So you just got to be ready for that. And there's parts of my portfolio that I do not want to live through that again. So I'm okay with covering. There's other parts that I'm going to have to live with, but it comes down to an individual choice of how much of it do you like. NVIDIA, I'm not hedging because I genuinely think NVIDIA is cheap here. And I really don't want NVIDIA to not be exposed to the upside. And the fact that NVIDIA hasn't recovered back to all-time highs is crazy, even though some of these other stocks have tried to make that run. So ultimately, it comes down to how the market goes. But if NVIDIA falls, I'm just like, does the rest of the market fall? Or if the rest of the market goes up, does NVIDIA stay flat at 170 to 180? Like these are the questions for next year to see.
Yeah, I mean, we'll see. I mean, it's Palantir is an amazing company. Let's see what type of deals they get. Now, Amit, did you see OpenAI wanting to raise $100 billion from sovereign wealth funds and now $800 billion valuation?
This is so bullish.
Are we getting? I mean, I get it; it's bullish, but are we getting a little ahead of ourselves?
Okay. So when OpenAI IPOs is probably the top, but until then, this keeps the party going because the market starts thinking that OpenAI has the money to fund all this shit that they keep saying they have the money to fund. If they collect all this, if there's some private investors that are like 830 billion, sure, take our money. I mean, it means the market can't be upset when NVIDIA, Micron, and Broadcom and all the command a higher premium because the darling of AI is easily getting this money and they're taking the money and they're spending it on AMD, Broadcom. Like, so I think this is so bullish. Eventually, when they go public, we'll have to see where the market is, but it makes sense that they are at least trying to get this valuation. And also it should settle some of the qualms about the market thinking they don't have the money if they're just raising the money. They posted a couple of videos about all this compute and just how much more demand is out there. That Sam Altman today said their enterprise business is growing way faster than the consumer business. Like if they can get a string of positive headlines to make up for that stupid podcast he did 2 months ago and a bigger valuation and some more cash, I think that could push the whole market up over the next 5 months, to be honest.
Some CEOs should just not do media. And they should hire a COO to do that.
Or just don't be a dick to one of your investors when he asks a question. Like that's a simple thing.
Especially how about not Gerstner?
Yeah, not Gerstner out of all people.
Like that's probably not the person that you want to piss off. Not a good one.
If they're raising 130 billion or whatever, like NVIDIA should get to $250 next year easily. If they're able to command that type of, like if they're able to get 1/4 of NVIDIA's valuation, and when we look at the metrics, it makes zero sense for NVIDIA to be trading here. So I do think this news should push up NVIDIA. I think there's a shot it can push up NVIDIA.
So
or just push
I'm sorry, I have an HR issue. Anyway, things Amit doesn't have to deal with. He's so lucky.
Yeah, I don't have to do HR, but I have thousands of comments all day that are like it's a different thing I have to deal with.
Google news today about their software, whatever the name of it is, being able to be run on their chips and not just NVIDIA's. Did you see that? Obviously you did, because I thought Walmart came out freaking today and it came out 9 days ago. So
yeah, I mean, look, it could potentially hurt NVIDIA, but I don't see that becoming a reality anytime soon. Like it is something to definitely think about in terms of CUDA's, the architecture and their moat. But I mean, I don't know. We need a lot more data before we say CUDA's done. But yes, it's The market didn't care. The market didn't react to it at all today.
No, because it's the first time you're hearing about it. I mean, look, at the end of the day, I still think NVIDIA is undervalued. And it goes back to my thesis that at some point, the massive growth is going to end, and I want to be out of NVIDIA before the tide turns. I just don't know when that's going to be. I think we're going to have a while before that is, but I think NVIDIA is fine long-term. Broadcom's getting very interesting to me, and I hate to say it, but I should have just bought back AMD at some point. Probably never going to, but, live and learn, right?
Live and learn. You live and learn.
Learn.
And this is bullish Google. I mean, if they can get more people to use TPUs and build software on top of it. I mean,
did you see that Altman was on CNBC 4 hours ago?
No, Altman was on a podcast that CNBC used the clip of.
Okay. Google is still a huge threat.
Yeah, he was not on CNBC. He was on a podcast that CNBC. Yeah.
Okay.
But yes, I mean, he talked very highly of Google.
Hard not to, right?
Yeah.
Hard not to. I mean, such an amazing company. Really amazing. Thank you so much.
Ori, that's my boy.
Ori, awesome. Really appreciate it. Thank you. So, Amit, I am looking to shake a few things up next year in 2 of my portfolios. One of them is just a side project portfolio. I think I'm going to do a 10 or 15% riff of the bottom 100 companies in it.
What do you mean 10 to 15%? Oh, you're going to get rid of 10 to 15%?
Yeah, I think I'm going to get rid of 10 or 15 positions from the dividend harvesting series on Seeking Alpha. I'm also thinking about doing 2 public portfolios on YouTube live.
That's a good idea. I think it makes sense.
I think I'm going to do a dividend one. I think I'm going to do a can I beat the S&P 500 one. And whatever capital I put into individual stocks, I have to put the same amount into an S&P 500 mutual fund. That way you can do all the dividends and long-term and short-term capital gains for me and get a true one-to-one.
Yeah, I think that makes sense. And I mean, that's what all of us are trying to do, right? Beat the S&P. So, and the dividend stuff is interesting because to see a dividend portfolio grow, I want to pick like 1 or 2 dividend stocks next year and just throw a little bit of money at those as well, outside of the S&P. And I think that Schwab equity fund might be the simplest one.
Well, I just did an article on SCHD. If you're looking long-term, the compounding growth because of their dividend is incredible.
Yeah.
I think that we're going to get an interesting environment next year for a broad market rally in some areas. And I think there's several names that pay a good dividend that can really rally next year.
Yeah, and I think, again, people are going to be chasing that yield if these rates keep coming down.
I mean, you get Waller in here. I mean, the rates are coming down.
Whether it's Waller, Hassett, like whoever it's going to be, they are going to come down.
I'm sorry. T-bill and chill at 5% was a cool tagline, but everybody got slaughtered by the S&P that did that. And then to think that we're still going to have an environment where people are excited to allocate capital to money market accounts and CDs and short-term duration bonds at 3% or under, I'm going to say it. I think we go to under 6 trillion in the Fred money market page if rates go under 3%.
I think we can get back to 7 trillion. We're at 7.6 right now. I don't think we get under 6. That's way too much money that would have to leave.
It's the same amount that came in after we got T-bill and chill because it plateaued and then popped back up. It was around 5.5 trillion.
It is possible. I mean, 2009, we lost 500 billion in money markets. So the equivalent of that would be probably around that like 1.5 trillion this time, 2 trillion. Yeah, it's possible. And if that does happen, stocks are going up, bro.
Oh, yeah.
Stocks are going up.
I do think that we're going to get into an environment where people are going to be looking back into the equity markets for yield. I think MLPs are going to do well. I think stuff like realty income is going to do well because realty income, the reality is that they have a 98.7% occupancy rate. They've paid, I mean, you just said you're making interested in one or two dividend stocks. Read these stats. I mean, this is from an income investing perspective. There is not many companies that can give you these stats right here. Read those four stats.
13.7% returns, 600 dividends, 113 quarterly increases, 4.2% compounding. I mean, there's not a lot of dividend stocks that can do that. You're right.
And 113 consecutive quarterly increases on your dividend, and it pays you monthly. This is an incredible compounder here.
Yeah, there's a few of these I want to look into next year. Like just simple names where you throw some, like, because again, I am so overexposed to growth with Nebius and Amazon and Meta and Robinhood and so Palantir, NVIDIA, Rocket Lab, some of the net new capital, I'm just like, all right, throw into something that's not going to be moving too much. And until I get a good idea. Like the problem is I don't have a really good idea right now. I thought that my idea this year would be grab. That one has not worked. So now it's a wait and see. Still love the idea, but the stock has not worked this year. That's fine. So the question is, what's the next idea? And I don't see an original idea that no one's talking about that legitimately could do 80% next year.
So when you say original, you mean something small that's going to get bigger or something that's just going to get bigger?
Something that's just going to grow and get bigger. And it's like, it doesn't have to be a small cap. It just has to be a name that really can outperform the market by a wide margin, just like Hood did, like Banter did, like SoFi did, like Rocket Lab did. But
I'm going to make you a bet. All right, this is live, so I can't go back on this. Not that I would go back on it. I will bet you dinner, okay? Let's say, hypothetically, the market does well next year and does 20%. You would want something to, basically what you're saying, to beat the market by 50% or more. So it would have to do 30% or more. Is that fair?
No, I'm talking about something independently that can go up 80 to 90%. Call it a double. What's a stock that can double?
Oh, double the market return.
Doesn't have to. No, forget the market. I'm talking about a stock that's $4 that goes to $9, or a stock that's 20 that gets to 39. You know, like a real, like honestly, the only one not the only, but Zeta's up there just because the valuation and their execution is really good, but I don't really trust them enough. Zeta I could see going to like $35 and a bull mark. 20% S&P 500 year. Yeah. Look, if the S&P does 20%, a lot of names will end up doing what I just described. I just don't have an original idea.
Man, I got something that could double next year. It's not original anymore, but it was original.
What is it?
QX motherfucking O.
Yeah, but can that double, Steve?
Hey, can it double? Yes, it can. Is it going to? I have no idea.
Oh, well, any stock can double. The question is, do you have any conviction that the past 5 years is down 18%? This is going to double next year?
What it's done in the past 5 years doesn't matter because it was a company that was basically a blank check company that just acquired Beacon Roofing a couple months ago. You got to look at it from where it was when I first started talking about it.
Yeah, I haven't done the work on this. So when you say it's going to... So
if Brad Jacobs does 3 or 4 big acquisitions in 26, this thing could double.
But wouldn't the opposite be true? The acquisitions would need the street to have some time to think, is there synergy here versus just, hey, we love it to the moon. Usually that's what happens with M&A, right?
If you look at the stats on when he's done this before and loading, he already has Beacon Roofing, which is an 11 billion company. Supposedly they're using Palantir software to redo everything. if he starts making other acquisitions and puts it on that platform and grows the revenue at scale, even if they get a one-time multiple, he can potentially double the company next year.
I'll look into it. I haven't looked into your article or anything on it. I mean, I know Brad Jacobs a bit, but I have not really dug.
Yeah, you should do the homework on it, especially with rates coming down, inclement weather. This is the time when people are going to start putting new roofs on, when people are going to be doing window projects, people are going to be borrowing to do home expansions. And if the housing market heats up because rates come down and people start moving, that also means that people are going to be willing to buy fixer-uppers and having to put money into it for construction projects. That is such a bullish setup for QXO.
The real estate angle definitely is exciting. If
Yes.
Trump can unlock that market aggressively. Yeah, I mean, look, QXO is up there. I think I do agree with a lot of people. The data center plays, I don't know if it's the Nebius and Irens, but I think the ones we don't talk about enough, I mean, they get one or two contracts, like that story could play out again next year for those. Unless the data center trade gets exhausted, which is very possible. But
it could get exhausted in the short term, but I think long term, the data center trade is going to be fine.
yeah.
Oracle, and I said it, Oracle was the only thing that could hurt us on this because of the debt load, and that's what happened. Oracle does not matter for the other companies. It's going to be fine.
Did you buy Nebius yet, or you're still thinking about it?
No, I really want to, but I didn't know if the market was going to turn back up or not. So I'd like to see Nebius go up just a little bit more before I start. But I am very interested in it.
I really like Nebius. I really do. It's volatile, so you got to position size it properly.
I mean, it can't be more volatile than BMNR.
It's not more. You know who we're not talking about? That's going to double next year.
Yeah, you talk about something that can double next year from here. BMNR can double in a week.
No, but the problem with it is it can only double if crypto doesn't come back. BMNR stuck, MicroStrategy stuck, Coinbase is stuck. Hood might escape that because there's more parts of their business. But if crypto doesn't come back, BMNR is not going to move. Neither is MicroStrategy. So
you see that SoFi is building their stable coin on Ethereum?
Yep. It's bullish. There's plenty of bullish arguments for ETH. It's just the price is not cooperating, I think, due to much bigger concerns than the ETH thesis. And that has to do with an argument around the macro. And if we're in crypto winter or not, which I don't know the answer to that question.
What the hell happened with Nike that went down 10%?
Tariffs. At least that was their excuse.
It was double beat.
Yeah, but dude, the EPS is still down year over year. Like the beat was so good. The fact that they beat by 40% and the EPS was still red year over year shows you how absolutely horrendous their financials have been over the past 2 years.
Yeah.
And China, they missed on China.
This is why I don't like clothing companies. And I know Nike's not a traditional clothing company. It does sneakers, it does sports gear, it does other things. But when people were asking me about Lulu, it's like, I just don't like the industry. There's too many intangibles that can happen that I just can't handicap for.
But some of those names can do phenomenal if you underwrite them properly. But I am also biased against the industry, but there are winners. Nike just sucks.
Look what Abercrombie & Fitch did. Who the hell thought Abercrombie & Fitch was going to go from 5 to whatever it went to?
Yeah.
I didn't have that on my freaking bingo card.
Yeah, 2023, they did amazing.
Absolutely amazing. Yeah, 2026 is going to be an interesting year. I still truly believe Salesforce is going to be the AI catch-up trade. I think 2026 is the year people really realize that their AI products are real. The narrative around their products sucks, gets destroyed because they just keep growing their revenue. And I just think from the pure cash it generates, it catches a bid. We'll see.
I think if rates come down enough, it helps them, but I don't know if their business fundamentals. If people aren't buying it here, when are they going to buy it? Like, what's going to be the catalyst, right?
Can we talk about IBM? People thought IBM was dead money for the longest time until it wasn't. Salesforce could be an IBM.
But Salesforce hasn't been dead for 10 years. IBM was dead for 10 years and then it rebounded. Salesforce just feels like the street doesn't care about them. Not that they're a bad company or anything. Year to date down 22%. 5 years, it's up 13%.
I am the dumbest smart person there is because I called IBM. It's in writing, and I freaking didn't buy it. And I told you and Chris at 120.
Yeah, you did. I
IBM was
remember.
going higher.
I remember. I did not care.
It's a freaking 300. And we could have got it with a 5.5% dividend too, and locked in that yield on cost.
Yeah, we missed IBM so bad. That was a great, and AI was their catalyst. It revived them.
Well, spinning off the legacy businesses was the first step for them, and then going heavy in consulting and AI was the next big thing for them. I mean, this is, oh my God.
I think what I'm also going to try to do next year is try to really utilize the LLMs to do deep research for me and be like, hey, these are the metrics I'm looking at. These are the things I need to see in a stock or in a company, and like let the LLMs just think really hard and give me some tickers, and then I can do the fundamental work on the tickers. But sometimes you just need more there's probably so many tickers in so many sectors that we don't know about that have like real opportunities next year.
If I told you that Salesforce is my next IBM, would you really think I'm that crazy?
I don't think you're crazy, but I would fade you again. And I hope you're right, but I do not trust Benioff.
Like,
he's an amazing guy. I don't trust him here, dude. I don't.
Like,
Agent Force is always a thing.
Keep in mind, everybody, this was not easy to write and stand by at 128. Nobody wanted to touch IBM. Now, granted, I didn't buy it. I just said it was a great opportunity. Okay. And I actually said that they looked 30 to 40% undervalued. Okay. And I didn't buy it. I can't believe I didn't buy it, but I'll tell you, Salesforce really looks that.
Can we make a pact next year that when you give a AAA rating on a stock, you just buy 100 shares? Like I know
told
it's not
you that I'm just going to put money in an account. I'm just going to give you the information, and you can just buy it.
No, I can't do that. You have to just, when you publish an article where you're uber bullish, forget 100 shares, buy 10 shares. Like just buy. Why one share to say, you don't have to tell people how many shares, but like, you know, I called IBM at 120, I bought it, and it's done well. That's it. You get all the credibility. No one needs to know how many. Like honestly, just one share. We could have had one share at Alpha at 50. That doubled.
Oh, freaking how hard was that to call when I called that one? Or you know what the craziest dark horse was? DocuSign.
I was about to say, you could have bought DocuSign at 50, be like, bought DocuSign. No one needs to know how much you bought. They just need to know you bought it.
I should be freaking retired right now is what I should be.
See, Matt, that's what I did with Rock Lab. I own 5 shares. Exactly. We give Matt all this credit for 5 shares of Rock Lab.
Yeah, I mean, listen, Matt called the freaking monster right there. Absolute monster.
It's hard for me to buy a name though, because I like for you, it's easy because you have so many positions. For me, if I buy a name, I'm like, okay, this is going to either be a pet project that's just sitting on the sidelines, which I hate because I have to look at it every day and think about what to do with it, or I'm going to emotionally now be with it up or down and deal with it. And if I'm not, like, if it's like VG is just a pet project, like, and I've been very honest, I like bought a couple hundred shares, like whatever, I don't care. You guys love it, I'm in. But I'm not, dude, if it goes to 0, it's like, okay, I don't care. If it goes up to 12, like great, I doubled. But if I'm building a real position, I feel like I need to really care about the name. So, or I need to have part of my portfolio where I take a swing at like 20, 30 different stocks, maybe like $5,000 max on those swings, and that's it. And there's no emotions attached to them.
The crazy thing is I actually looked into the lawsuits between the 2 big companies. I mean, there's other ones that are smaller, but I looked into the lawsuits with the 2 big companies against VG. And I'm actually starting to think that it's now becoming a really interesting opportunity at these levels because I don't think that these are company killers. And the more I look into VG, the more it's interesting here than it was at 18 or 20. And I was thinking about starting a position. I haven't, but
Wait,
my
why haven't you just?
here's
Like,
my
what-
fear with it. Okay.
No, but at $6, what
I
fear?
get
Even
it.
if you have a fear, like what possibly could be the issue with a $6 stock? You buy 100 shares.
My fear is that in 3 years from now, the political sentiment around traditional sources of energy changes and we get a huge seesaw to the other side and we go through the whole narrative again and it just creates a huge bottleneck and we see wackos trying to put the brakes on exporting LNG. And don't tell me that that can't happen because we've lived through it before.
We lived through it. The reason Enphase got to $400 is because I agree that could happen. I don't know if that's enough of a reason to not throw a little bit of money at it, given how much work you've already done on it, because you actually understand LNG. Like you've actually know how to read those balance sheets. I mean, it's down 70%, bro. Like if you're not taking a swing here, I don't know when you're going to take a swing.
Yeah, no, I will probably start a position over the next couple of weeks on it and just let it sit there. Maybe I'll buy more, maybe I won't. But understanding energy and that over the next 2 decades, every credible governing energy body from the EIA to the IEA, and I did say 2 different things, EIA and IEA, are all predicting we need more energy in the future. And I just don't believe that it's going to come from abandoning traditional energy sources. The world needs more American LNG, and there's only one way to ship it, and it's through liquefaction. So,
yeah, that sounds pretty good to me. Buy some stock. That's enough to at least get some skin in the game, in my opinion. Also, in 3 years of the pendulum shifts, I mean, like, is it going to be flat for 3 years? Like, you think it's at 6 for 3 years? I mean, you should be able to sell if you think AOC wins and, you know.
Well, let's not get crazy. I mean, I'm not so sure she can win the delegates vote. Okay. I don't think that she's going to be the person who comes out of the party.
I think she has a decent shot.
She's the most famous. I don't think she's
honestly, dude. What did we say about Trump in 2016? There was no way he was the most famous.
Trust me, the people I was talking to was not saying there's no way he's going to win.
Well, I would say the mainstream said there was no way because he's a celebrity.
They're always wrong, though.
No, but like if the mainstream says AOC can't do it because she's too radical, I mean, that was Trump in 2016. Like AOC is also charismatic.
You're not wrong. I really do think that it's going to be Josh Shapiro and someone else.
I don't think it's going to be Josh. I don't think he tries to be like other people. He's not original. You can tell the way he talks. He's got no soul in him. Newsom is probably the best option, but Newsom also is just like, I think people.
I don't think he'll get through it. But that's my big fear. I mean, look, they're doing 4.8 billion in EBITDA. They're expected to do over 6 billion in EBITDA this year. They're going to keep growing EBITDA, and I don't think that these 2 big lawsuits are company enders. So I wouldn't be surprised if VG gets back to 10 to 12 and then gradually makes its way back. I think it just IPO'd at a horrible price at a horrible time because it wasn't a tech company. Now you look at Cheniere, they can be a baby Cheniere and even be a real Cheniere competitor. So,
so why not? So why not buy at 6? What's the hesitation?
You know what? I guess
I'm not even trying to pressure you. I'm just saying you're giving me every bull argument and it's down 80%. I don't know if you were waiting for 90% down, $3 to buy, which maybe it goes to. I don't know. I really don't know enough about the company.
I will start buying VJ.
I bought 200 shares. I'm in it for $1,200. So I'm gonna claim when VG goes to the moon. I'm claiming all the credit, dude. Like, guys, I told you, liquefied natural gas. It's the future. Like, I don't get it. I don't know. It was a baby Chenier. It was a baby Chenier.
Chenier.
Literally, I told you guys, it was a baby Chenier.
Baby Chenier.
My 200 shares are gonna ride into the sunset.
Oh, Matt Money making fun of me. Yeah, I know, Matt. They have the ability to be almost as big as Chenier from an exporting standpoint. I know.
Dude, wait, what's Chenier's market cap? Like 40?
LNG is the ticker.
40, dude. 40.8. And what's VG's market cap? 15? 15. Okay, so that's a 2x, 2.3x. That's 18 bucks. No, a little bit under 18, 15, but I'll take that. 6 to 15.
So Matt, I am not accounting for them building out every last train that's in their path. They could become bigger. It's going to take some time, though.
Wait, but hold on. That means these guys went public at 60 billion?
They went public at a horrible valuation.
Okay, so that was the issue. Who the hell gave them a $60 billion value? That was the bigger problem.
They have a lot of debt. They went public at a bad
Why did they get a
valuation.
60 billion market cap on, like, how did anyone justify that? That's the bigger question, right? Like, how did the market say, yeah, that means it was bigger than Chenier at IPO. And I don't know anything about LNG, so I'm confused how it even got there. But that also tells me that's bullish. If the market gave it that much of a premium, unless that was like a meme stock type of valuation, that means, yeah, it already was bigger than Chenier.
Got news for you. Energy stocks don't become meme stocks.
Okay, so then if the market said it's worth 60 8 months ago, and now it's at 15, which is less than Chenier, I feel like you got to take a swing here if you believe in this thing. It makes sense.
Tomorrow, I am probably adding 2 names to the portfolio. Nebius and Venture Global. I will put a tweet out after I do. How about that?
Dude, hold on. No, you should leave your tweet to Nebius alone and then do a separate tweet for VG. The Nebius community will be very happy to see that Mr. Milkman joined them. They'll be very happy. And then the VG community is growing as well on X.
Oh, Matt. Oh, Matt. Mr. AMJ, thank you very much. Truly appreciate it. Oh, now we got Mamba Forever talking like a Mitt.
No,
Mitt,
you want to do
right up you.
No, this is where you buy out of the money calls on VG. This is not where it's down 74%.
Yeah, you buy ITM to hedge.
Yeah, this is where you pound the table on the $10 leaps for Jan 2028, I feel like. Tevis says 1,000% taking credit for the Nebius buy, annoyed him daily for a week into pulling the. Oh, so it's Tevis that got you into.
A lot of people have been annoying me about Nebius. And I looked into it, and
oh my gosh, you just can't be compelled unless one of your friends kind of convinces you to smoke the weed. Huh?
You know what it is?
Actually, peer pressure you to take a hit.
I didn't like the valuation and where it was, and now it's back to something that looks interesting.
Well, it looks like you're going to be in.
Yeah, I mean, we'll see. There'll be some tweets tomorrow. I can tell you that right now. There will be some tweets tomorrow. But
VG up 1%. Steve, you pumped VG. It's already up 1% overnight.
I can't pump anything. The stocks I am looking at for next year, more Salesforce. And I don't think I'm doing anything for New Year's. So I do think I'm going to do a New Year's Eve stream and go through a lot of stuff for next year. But the stuff that I'm interested to add to that I currently own are Amazon, Salesforce, potentially Meta. I don't know if I'm going to add to Meta. Probably NVIDIA. And then the 3 that I think I'm going to add as new positions, Broadcom, Nebius, and Venture Global.
I mean, you might as well add
every other stock in the market at this point. You know, you might as well just.
Can't own them all.
It's funny because it's like you're adding the new positions, but it's like you already have so many positions. So
You know,
it's
I'm
just
thinking about
hard.
selling off VEA and SPEM.
I don't even know what those are. You own those?
VEA is a European index fund.
Well, that's done. That should have done well this year, right?
That's why I own it. It's a hedge against the S&P. It's up freaking 30% this year.
Dude, why did we not go long Europe this year?
I mean, that's why I have VEA. I own it at like a 4% dividend.
Why did we miss Europe this year? We were so obsessed with the freaking US. We had this whole fucking tariff nonsense. We could have just went long Europe.
I mean, but over 5 years, it's done shit.
Okay,
It's
but
just
this
been-
year it worked.
It's just
This
paid a
year-
really good dividend. But my thinking is, if I own this, I own SPEM for my emerging market fund. I don't even know what the hell this does. I never look at 10% in the past 5 years. I don't have
For
a
everyone
lot
saying
in
the
it.
EU, for everyone saying the EU sucks, this year it didn't suck. So you can complain about it, but it worked this year.
Yeah, it did.
Like, I don't really care. I have no emotion to it being the EU. All I care about is, did it work? And then why did we not take a stab at it?
The EU, man.
There were probably
EU.
companies there that were significantly cheaper than American tech companies. That's why it probably got a bid.
Thank you, June. You guys complain that Steve has too many positions, yet you pressure him to further diversify.
That's true. We give you too much of a hard time. We give you such a hard time with this. No, it's good. Look, dude, as I'm getting older, I also like the idea of diversify. It's healthier on your mental. It really is.
So much healthier.
So much healthier. And you get to feel like an owner in multiple different companies, and you don't have to be super concentrated. And you're not going to get the massive year-to-date returns, but at some point you also don't care. You just steady grow the pie. That's it. So it's not crazy.
Look, diversification is not for everybody. It takes a lot of research, but it can work out pretty freaking well for people. And when things get rough, it really can make you sleep well at night.
Yeah. Dude, the reason it's hard for a lot of us to sleep well at night when we have a 5% S&P 500 drawdown is because we're also concentrated high beta, which is why we've got to where we all have got to over the past couple of years. So the more I think about it, the more I'm just like, okay, so do we need to quadruple that again over the next 5 years, or can we take a slower pace? Not a slow enough pace where you're talking about 3-4% a year. You want to have some alpha, but you also don't want to be that mentally attached to the downside every time it happens and have your whole mood and mind screwed up just because the S&P fell 5%. Like it's just not healthy for anybody. There's also other parts of our lives that I think we want to focus on. And I don't know about you guys, but it's really hard for me to focus when I'm down $500,000 in like 2 weeks. Like that's not fun. It's just hard mentally to deal with that. And so, yeah, I don't think it's crazy to. And by the way, if you're diversifying into Meta and Amazon, like, I mean, you still have a decent chance to do better than the index and, still be in phenomenal companies.
Can I show you a silly chart of an account you could care less about?
Okay.
I have finally allocated $25,000 to the dividend harvesting portfolio. I have finally got there. $100 a week for the past 250 weeks. And the lines on this chart, the blue line is invested capital, the red line is the account value, and the yellow line is the dividend income it's producing. But look at the risk mitigation from there's 103 positions, I think, in this portfolio. But look at the risk mitigation and think about all the shit we've gone through. Like, this was the Ukraine war right here. This was the height.
Wait, so hold on. Can we get some aggregate stats? Like, when did you start this and what's the overall return? Is this like a little portfolio?
I started this in 2021, I guess 250 weeks ago.
Okay, and what's the return on it all time?
So look, this was built with two investment goals: risk mitigation and generating reoccurring income. Capital appreciation was a secondary goal. So right now, the actual stats are, I am up 31.36% on capital appreciation. It's up $7,800 and change, but it is generating an 8.09% yield, portfolio yield. My yield on invested capital is 10.62%, and it generates income weekly.
Okay, but how much did you start off with in week 1 versus
$100.
and it's at 24,000 today?
The 25,000 invested capital. I put in $100 a week.
Okay, so
and I've just put income producing assets.
So 250 times 100 is at 25. So how much return? Like how much?
Keep in mind, I was not investing in this for return. This is to build an income.
No, that's fine. That's fine. I'm not judging it off. I'm just curious.
Return is 31.36%.
Over 250. That's what, over 4 years? Over 4 or 5 years?
Close to 5. The key thing is it's doing $2,655.41. It's an 8% yield across 103 positions.
Right.
Capital just can, and I'm going to keep building this out probably. I think I'm going to try to keep this series going for 1,000 weeks.
Okay, so
because I want to show what the S curve is going to be.
But the goal here was to get income that you could just reinvest into it, right?
Yeah. So the goal with it is everybody thinks you need a lot.
My question is, if it did 7% a year, then why not just put it into the S&P?
Here's why. Because one, it's a side project for me. Obviously.
But besides the whole seeking alpha part of it, like.
Yep. Because I want to have this account is just going to be one of many components that generates reoccurring income when I retire. And I want to document how I would build an income producing portfolio from the ground up, starting from nothing with just a budget of 100 a week, because there's always been a stigma about you need so much money to invest in income producing stocks. I'm like, well, no, everybody's got to start somewhere. You can legitimately start with just $100 and keep buying over time. And showing how the actual income has grown, the next 5 years is going to be pretty profound with the compounding of this. And I'll show you one more chart. I think you may find this interesting. I find it very interesting how much the monthly income has changed over the past several years. So I'm tracking every month. I track every week, but this chart is month by month. And you look at November, year 1, 23.24, year 2, 62.47, then 100, 157, and then 204. And you keep thinking about this over the long term, which just keep adding 100, adding 100. And you can do that with any amount of money. And it's just capital that just keeps getting plowed right back into it. So over the next probably 2 to 3 years, I'll be generating enough income that it'll match what I'm putting in each week.
Yeah, and the idea for people that are older and actually want to generate income, this is a perfect idea because you get to see the income, which is what matters, right? Like if you're doing it for the income. I guess the question then becomes, if you just put it into like one thing that also provides,
you could do way better.
Yeah.
But if you are in a position where you can put $100 a week in and you're still able to make your other normal investments, if you have 20 or 30 years to do that without even thinking about it, you're going to have something that's generating a lot of income when you're retired that'll pay a lot of bills. And it's just something that you just built in.
And you reinvested every dividend right back into it. Gotcha.
Yeah.
Oh, it makes sense.
And I think that's where people don't think about it like that. Where, yeah, sure, it doesn't look like a lot of amount of money now, and $2,600 isn't really a lot of income coming in. But if you have 20 or 30 years to keep doing this, on top of making your 401k investments, on top of making your other investments, this becomes a side account that actually becomes a huge income producing account when you're ready to retire.
Yeah, and if it only needs $100 a week too to get going, it's not the worst idea at all.
I mean, you think about it, if you can do it, 20, 30 years, it becomes pretty freaking big.
Yeah, and if someone could add like 1,000 a month instead of 100 a week, it'll just compound even faster.
Just add a zero to all those numbers.
Yeah.
Oh yeah. So
the Bank of Japan stuff is happening like soon, but I don't know if we're going to see an immediate impact, guys. We might, but.
Are you ready for a freaking another yen carry trade?
I don't think we're going to have one. I really don't. I think smart money's pulled out of that.
I'll never forget when you called me and you were telling me about what Mike Wilson said. I'm like, I don't give a beep. And I explained to you that exactly why it wasn't going to matter. I mean, we have such a space where every little detail is so overemphasized these days. It's not that complicated. It's really not.
Well, no, I agree. The problem is we all obsess, including myself, over every little freaking detail, which is already not healthy.
No, it's not healthy.
It's entertaining / informative, and it's better than that versus like caring about Kim Kardashian's relationship. But it also isn't healthy because then any little drawdown or upswing, you get too many emotions, dude. And that's why I think it's important to just step out of that a little bit.
I think it's also important to seriously not have all of your money in, and this is my opinion, not have all your money in like 2 or 3 stocks.
I agree. Look, but
Because
look,
if something happens with one of them, like let's just say you have $1 million for argument's sake, and you put 333,000 across 3 stocks, and something happens to one of them, and they take a 50% drawdown, like you're gonna over obsess at that.
Yes. Now to get that, let's say potential 100,000 to $1 million in 2 to 3 years, you got to concentrate on those 3.
100%.
So
look,
but
listen,
my point is. No, you got to take risks. But my point is just over the past couple of years, I think a lot of us did that. We picked those 2 or 3 names and we went all in. And now that it's worked, to still have that level of risk appetite, to keep it that concentrated without any level of protection or just like diversification. And if you lose it, you can only blame yourself. You cannot be mad at the market at that point, right?
I'm going to tell you my biggest problem with a lot of investors. They don't know when to flip the switch and go into capital preservation mode.
That's exactly what Jason said a couple nights ago when I was talking to him.
I find it hilarious that people that have made a lot of money don't understand the idea that you don't have to keep going at that pace. Take 20% of it or 30% of it and use that as the capital that you're going to keep going at that pace as, and protect the rest.
Yeah, you don't stop the pace. You just don't have the same position sizing on that pace. It's just the law of large numbers, because if anything goes against you, which inevitably it will, we just experienced that in November, you get either wiped out if you're on leverage, or you start back from the bottom again because you lose all of it or a good chunk of it. So now look, again, if your conviction, here's the other thing. A lot of us that picked Palantir at $6-7, our conviction was so strong. And I don't think the conviction has changed for any of us. In fact, the story has just gone better and better. But that conviction was when the stock was trading at absolute dirt cheap. Same for Hood, SoFi, Rock 11. These stocks are not dirt cheap anymore. They're just not.
And let's add one very important thing. The market was misinformed about them.
That's the biggest point.
And there was a narrative that we all knew was eventually going to change.
I remember, I've told this story so many times, but I remember being on Zoom with Arnie after Palantir Weekly in 2022. It was like 2 a.m. And you know, Palantir had a bad week and the stock was, and I was like, dude, if we just keep doing what we're doing, we know this $9 stock is not going to be $9 one day. We talked like 3 hours, and we're like, we went through the DD ourselves. We had another Palantir Weekly episode by ourselves, and we're like, we know what we're doing is right.
And it worked out. But that's a different Palantir at 185 versus at 9, or a Hood at 130 versus $7. And that's the part where growing and maturing a little bit is like, I can't expect Hood to do another 5x in freaking 2-3 years. That's just greedy of me. If it happens, great. But if it doesn't, it's like, I can't be mad at that.
The problem that you have with a Robinhood right now is everybody loves the company. It's executed phenomenally well, but it's now playing in an arena where it is not a little $10 billion company. And you're now at a point where people are seriously looking at against a Schwab or against Interactive Brokers or against other big financial institutions. It's going to be much harder for them to go from 100 to 200 billion than it was to go from 10 to 100.
I had a debate with Carlos and Vitali when Palantir was 7 and Tesla was worth 300 billion. I think Tesla was worth 300 billion and Palantir was 30 billion. And I was like, guys, I think Palantir from 30 to 300 is way easier than Tesla from 300 to 3 trillion. So 300 billion times 10 is that 30 trillion or 3 trillion? It's 30 trillion. No, it's 3.
3 trillion.
Yeah, 3 trillion. And I was right, dude. Like when Palantir was $7, I was like, no, this thing 10xing is way easier than that. Now Tesla's done great. It's done well, but it's like Palantir's massively outperformed. And so, but Palantir was worth freaking $30 billion. Robinhood was worth $10 billion. These companies are not at these valuations anymore. And so to your point, it's harder now. They're still amazing. They're executing at a level, but it's just a harder return for them to get there.
And I'll tell you, I really do think SoFi can really do something next year, because I think people are going to, for the stupidest reason, forget the execution, forget that I'm bullish, forget that I actually understand the company, okay? For nothing else, then everybody's going to look at Hood and be like, we missed Hood. Can SoFi do the same thing? And I think people are going to dabble in it. And I think it's going to get a lot more volume. And I think when the S&P 500 inclusion eventually happens, you will then see it start to move. And who knows what happens from there.
Yeah, I mean, look, I like SoFi here. I really do. And the premiums are great on SoFi. Even if you're just wheeling it, like it barely moves sometimes, and the premiums work out. But SoFi should have that explosive move to like $40-$50.
Yeah, I'm not interested in playing it until it has that next leg up.
Someone said all this talk makes me miss 2022. That is the benefit of a bear market, is that you get these ridiculous opportunities, this is why 2025 has been so special. Forget the year to date on the S&P. The April to December return, that's what we should really be, because that is like bonkers across the board, because we actually got stocks collapsing by 40%.
And remember who is here to talk you guys off a ledge.
And you'll be here the next time that happens. Hopefully if there's some more protection that we don't have to be at that ledge again, you know, because it's not, and hopefully you have some more money on this. Like, dude, in April, I had whatever money I had that I could throw into the market, but it's not like I had the same amount of money that I had in 2023 when I was just constantly pushing it in. So it's like having money to buy the dip when the dip happens is also so important. But you have to have something. As you said, cash is not trash at that point.
Cash is not trash. I hate when people say that. Stop saying cash is trash. Stop trying to sound smart that you're losing purchasing power, blah, 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 blah. Stop. Because when stocks go down, cash is golden, okay? You're not sitting on cash to go buy a freaking Nike sweatshirt in 2 years from now. You're sitting on cash to build a reserve in case you get a huge discounted opportunity. But I was going to say at the same time, that's also where investing in the S&P can be good for somebody like you, because, and this is strictly for a MIT, nobody else, okay? For you to build an S&P fund as your reserve allows you to participate in the market, allows you to catch the upside, but then in a downtrend, when the S&P is down 20%, but everything else is down 50%, you're still massively up compared to everything else, and you can start liquidating that and moving it into the positions you want to freaking throw money into.
Correct. You can
get
rid of the S&P
options off of it also along the way.
Yeah, when shit hits the fan, you can get rid of something that's down 10% to buy something that's down 50%.
Right.
You know the rebound will
really good spread.
and the rebound will make up for the 10% you lost on the S. So I 100% agree. So
Hey,
even if
you had some, look at the time. Do you still have something you need?
yeah, I got to be out in
Okay.
like now probably.
Oh, yeah, well, that's what I'm telling you. Look at the time. I just realized.
The thing is, like, if you don't want to have cash on the sidelines, and it's in the S&P, so at least it's doing something, on that market correction, you can get rid of the S&P and buy something that's way cheaper. So I agree with you. Psychologically, if you just don't feel like having the cash, at least you have it somewhere where it's like cash, which is the S&P, even though it's not really like cash.
Yeah, I mean, it's the S&P is one of my favorite things.
Gotta get into it.
Thank you very much. Palantir's 15% behind Oracle. Yeah, I mean, I'm not going to get. I ranted about it last night. I'm not going to do another rant about it. Chris, thank you very much. Have I invested in precious metal space? I have invested in the space, but not in Newmont Corporation. I take a different approach with precious metals. It's funny. Nobody wanted to listen to me about silver either.
Well, silver is down right now, but yeah, man, it's had a massive move, down 2%. But dude, crazy year.
Crazy year for silver.
Silver and gold, they did what they had to do. I don't know if they replicated though, bro. Like the idea that people think it's going to double it. I'm like, all right, now it's getting kind of bubbly.
I think the talk is silver to 100 is crazy, but who knows?
Like silver to double again. If it happens, great, but I'm not taking that risk. Not on a commodity. I mean, it looks kind of like it looked in 2011. It looks like it's going to pop, but the market conditions are way different. I just don't know if that's the risk reward right now.
Yeah. Yep. All right. Well, you got to head out.
Yeah, I'm out.
Yeah. I will talk to you tomorrow. If you want, I can beep the horn for you on the market close.
Dude, we always need you beeping the horn on the close.
On a Friday, it's kind of a thing.
It's a tradition. We need to make sure. Are you gonna stay on with everybody, or
yeah, I'm gonna stay on with everybody for a little bit.
All
right. I'll see you tomorrow.
Good stuff. Bye, guys. See you tomorrow.
All right, everyone. What a great guy he is. Listen, Noto, if this gets back to you, go on a Mitch channel and go on Tanner's channel. You don't have to come on mine. Go on the two of their channels, please. I think it would be very good. So I think we're just rattle stuff off. We'll do a AMA, I guess, for a little bit. Silver quarter is worth like $12, right? Yeah, I mean, there's some silver that's really interesting right now. Matt, you're still here? Why don't you come on? Hold on, Matt, what time is Cash Flow Chronicles? Maddie, what time is Cash Flow Chronicles? 20 minutes. Maybe we'll see. You know what? I'm gonna send you something. If you're interested, you can hop on if you want to hop on for a little bit before cash flow. Let's see. I do not use any S block. No. Yeah, Nebius and Iren is I'm not a big Iren fan, but Nebius is getting very interesting. I'm a big fan of SLB, everyone. I will tell you that right now. Big fan. Very bullish SLB. Now, Amit had somewhere he had to be. I haven't looked into BP's new CEO. I got to look into it. Let's see. My thoughts on NVIDIA 2026 is it's incredible. incredibly interesting. And I have a big position and I'm excited. I think all the news right now is just noise. That's all. I like EPD and ET. I like ET a bit better, but I like EPD a lot. I mean, EPD is looked at as the gold standard in the MLP space. So 26 years of increasing your distribution doesn't suck. I can tell you that right now. I'm not following what ARK is doing. ARK really annoyed me with their research on Tesla. So I'd love to talk to somebody from there about how they came up with that research because it doesn't make any sense to me. That's just me. I don't follow Hess midstream, so I really can't tell you. My price target for NVIDIA was 185 for this year. I think next year it is not uncalled for NVIDIA to be 250. So that's my own opinion. The dividend harvesting account, it's just a series. It's a side project on Seeking Alpha. All the income gets reinvested. I don't take the money out. I'm probably going to write it for another 15 years, hopefully. I'd like to do it for 1,000 weeks and see where I can get it. I do like MPLX a lot. I think that it's ran a little bit. I'd be interested under 50, but MPLX is a great company. I think we can still get a Santa rally. Look, I'm long BMNR. I think that we need a lot of stablecoin adoption over the next year. And let's see. I mean, hopefully SoFi's stablecoin is going to be huge and have a lot of transaction value because it's built on Ethereum. So one more company building on Ethereum. Yeah, MPLX's distribution is incredible. Thank you. I don't know what the hell is going on. I'm seriously considering getting a second internet line and getting another computer at this point. I'm sick of hearing the comments. So I'm glad it looks good and sounds good now, but it's annoying that sometimes it freaking Amit wants me to blame it on freaking StreamYard. I'm not going to do that. I'm going to blame it on me. QXO to 50, I would not be surprised. We do need to study SMCI. Absolutely. It is on my list of things to do due diligence on. I do a lot of research on my dividend stocks. It's there's a, I mean, you got to remember, I was buying Citigroup in that portfolio at 40 and 45. I was buying Altria Group at 40. I mean, it's just companies I like. Never buying a MacBook. Sorry, Sergio. That's not happening. I have no idea what DVLT is, but I can take a look at some point. Yeah, I think a lot of people are down on BMNR. BMNR is a several-year play. I mean, it's all my thesis on Ethereum. I've been buying Ethereum and I've been buying. Oh, hold on, Sergio, don't do that to me. David Craig, it's Daniel Craig, and he was the best 007 there ever was. Followed by Pierce Bronson. I'm buying both BMNR and Ethereum. I just don't like Mac computers. I just don't like them. I have an iPhone. I have an iPad Pro. I don't like Mac computers. You know, I'm going against all the traditionalists. I'm not a freaking Sean Connery fan as James Bond. I'm sorry. Daniel Craig was way better. Pierce was freaking great. I mean, come on. GoldenEye is the second best Bond movie there is. The first best one is Casino Royale. Casino Royale is a true masterpiece. All right? Masterpiece. I'm an NVDA fan over AMD. Favorite Batman, it was always Michael Keaton until freaking Christian Bale took up the Dark Knight. And I got to tell you, Christian Bale's unfreaking believable. I like SCHD, but it's something you got to hold for a long time. Don't start with Roger Moore. Come on. Now you guys are just freaking trolling me. Hey, Matt, I asked that to all my prey. How about that? Thinking I wouldn't know the next line off of the Joker? Come on. I asked that to all my prey. I am bullish in 2026. Yeah, listen, Christian Bale is top 5 actor of a generation. And I will agree that when you look at him in The Fighter, incredible. Yes, I've compared Broadcom to AMD. Broadcom looks way better. Thank you, Stock Diamonds. Your thoughts on SPY calls leap 2 years out deep in the money around 70-80 delta. Unless you're using it as a hedge strategy, I don't know. It's not for me in the money calls. Unless you're doing it as a hedge, I don't see the real reason to do it. I just don't. If you have a lot of conviction, you'd have to run the numbers, but there's probably more alpha in just buying out of the money calls instead of deep in the money. Yeah, look, does Jake Paul have a chance against Anthony Joshua? Obviously, he has a chance. It doesn't matter who the fight is between. Any fighter has a puncher's chance, okay? Anybody can get caught. At the same time, the probability of Jake Paul winning this fight is so slim. I don't see a way for him to win other than getting extremely lucky, okay? Nothing against him. The guy's a legit fighter now. You know, you can't say that he's a Disney character. He is a legit fighter. He's put the time in. He's trained correctly. He's spent an enormous amount of money doing it. He has dedicated his entire life at this point over the past, 6 years, 7 years doing this. He's become a legit fighter. Now the question is he getting knocked down in round 1 or not? I think he is. That's my opinion. When Cookie Company. More to come. No. Heath Ledger is not the best Joker. Sorry. Not going against Jack. Come on. Clooney is Batman. Stop it. I did not see Stephanie Ling's top pick for 2026. What is it? You guys know that I think she's great. What is it? Yeah, I'm with you guys. Jack is the best Joker. Altria Group's been the best one for me, believe it or not. Altria Group's done really freaking well. Yeah, Jack has been amazing in pretty much everything he's done. Look, Energy Transfer, you can't replicate their infrastructure. 120,000 miles of pipeline. You got tremendous storage. I think it's very undervalued when you look at the enterprise value to EBITDA, market cap to distributable cash flow. I think it's a great company. And you're getting paid 8%. Utilities have already ran. I think they can still do good. I like NextEra Energy. Somebody did ask me before if I've looked into Dominion. I have looked into Dominion. I don't own it. I own Southern Company. I own Consolidated Edison and something else. Thank you, Dad Hibbs, for the super chat. You put 23. Is that because of Jordan, LeBron, or Mattingly? Which 23? Yeah, AMD can do really well in 2026. I would not be surprised if it freaking goes up a lot. I'm not that interested in what happens with Japan right now. It doesn't matter for what I'm investing in or how I invest. I invest for the long term. Thank God you said Jordan. Thank God. I mean, look, it's no secret that I sold AMD at $3.68. So it's my worst, something that I own that I've sold. It's my worst one. Not a sore subject, but I just, I used to sideways trade it for a while back in the day when it just hovered between $5 and $8. Got caught. I kept buying. And then I just wanted my money back. It went up. I took my money out. I finally got back to even. And then it just kept going and going and going and going. So I really don't follow AMD that much anymore. I did not listen to the Google episode on the Acquired podcast, chat. I'm going to have to listen to it. I follow crypto a little bit. I am a Ethereum person at this point. Still have my XRP, never getting rid of it. But Ethereum's where it's at for me. I mean, yeah, people have done very well on AMD. I hope it keeps going up for everybody. Mr. AMJ, thank you very much. Truly appreciate it. Listen. I only have one, okay? And I will tell you, there is some very interesting stuff that you can acquire if you want to buy bullion. The two sites that I recommend are SD Bullion or Bullion Exchanges. I think that they have very good prices, very interesting stuff. I like Britannica's US Eagles and Cougar Ants. Ethereum is a long-term hold for me. The plant's never happening. There's never going to be a plant in back of me. I think NVIDIA can hit 250, but I have no idea. I think recession risk is off the table now. I got to tell you, I'm just, after reading through the Fed economic projections, I am, unless unemployment keeps going up. I mean, I don't think it's good that we're at 4.6, but, you know, we'll see. People may be sleeping on Upstart. I got no idea. I'm not buying NVIDIA here. I have a bunch of it, but I would be interested if it goes lower. Best films to watch in the last couple of days, 2025. I don't know. I've been trying to find new stuff to watch, and I keep finding myself going back and watching stuff I've already watched. I am back on watching the TV show Power. I know I need a Jeter jersey. I know. Trust me, I know. I will be paying attention to try to get one. All I can say is we believe in the Second Amendment. That's all I can say. Spencer, come on. You know the answer that is no to that. Come on. I'm not following Rivian. I couldn't even tell you. I am not Batman, guys. Come on. Yeah, somebody else said The Diplomat was good. I haven't watched it yet. I got to get through season 3 again of Power. It's such a good TV show. Yeah, I like Verizon. Yes, I really said Heath is not the best Joker. Listen, I appreciate you saying I'm your superhero. I appreciate it. I do not follow Vive. I'm sorry. I like Fortnite. Yeah, I ended up working today. I ended up going into the office. I had taken the day off and ended up going into the office, unfortunately. I don't know if I like oil for 26. I want to see oil stay between 55 and 65. So I don't, unless we get a black swan event, I don't think we're seeing oil in 80. So, especially not with this administration. Yeah, we'll see what happens. I'd like to get somebody specific on for a watch episode, but we'll see. Yeah, pretty much. Office by morning, Seeking Alpha, YouTube by night. So 3 different things. I don't know. My brain doesn't shut off. I don't know what to say. Traffic sucked today, by the way. Have I considered investing in a razor? Yeah, I have a razor. I just get lazy and don't want to shave. Kevin, thank you very much. Appreciate it. Interesting take on selling ETFs to buy companies in a downturn. Have you done this before? I have not done it before. It was specific to a MITS situation, okay? That if you want to build a stockpile that you can use in a downturn, what I had said to Amit is, allocating capital to the S&P is not a horrible idea. He can sell calls against it. And then if you get a 10% retracement, stuff you were interested in buying is probably down a lot more. So there's a big spread there, and you can move that capital in if you want to. That was strictly for Amit, though. You start saying coffee? Good. Because that's the way you say it, coffee. Yeah, I mean, the YouTube journey is great. I think the community is awesome. So, favorite Christmas cookie? I mean, come on, it's a chocolate chip cookie. It's the same cookie every time. Chocolate chip cookie. But I don't discriminate against all different types of Christmas cookies. I'll eat them all. I will eat them all. Yeah, so I'm going to look into doing 2 YouTube portfolios. It's not for clickbait. I'm not putting an amount of money in just so people click. It's going to be just for myself and the community. One of them is going to be a income portfolio. I have not decided on amounts yet. I actually don't even know how I'm going to structure it. I got to think about what it's going to be. I think that I want to redo my dividend harvesting portfolio series. I mean, look, I'll show you what it looks like. I put a lot of work into it, and I do a ton of charts. And so if I take you through it, for those of you that haven't read the series, I'll link it. So it's in the chat. But I do a full portfolio with all the graphics, invested income, the dividend growth, the weekly dividends, the monthly dividends, portfolio size, allocation per sector. I give you the actual weekly progress that's happening with a description of what's happening that week, the annual dividend income by sector. I give you the weekly income produced off of it, the monthly income, how many positions are generating at least 1 share per year from the dividends being reinvested, and what percentage all the other ones are at. I give you the percentage of the portfolio, give you the top positions, the actual details of the positions with how many for the top 10, with how many shares have been generated from the initial, or all the ROI characteristics, and then what the forward annual income looks like, and what the projected income is. So $7.25 per day being generated from this portfolio right now. So I'm going to do something similar for the YouTube crew. So I just got to figure out in my mind how I want to structure it and what I want to do. But I'm going to do probably one like that, and then I'm going to do another one for trying to beat the S&P. Sleep is for the weak. I like it. I don't like Netflix at these levels. So that's just me. I don't have an affiliate link to Seeking Alpha, so all I can tell you is I do think that they have great research on there. Trust me, I have no free time, okay? No free time. VGT, I like it as a technology ETF. I mean, I think Vanguard does really good. I like the low expense ratios. So I don't know. I mean, it's interesting about Netflix because Kushner's investment firm pulled back. I still don't know that it gets through regulators, so I don't know. I can tell you a lot of companies are buying office buildings and converting to multifamily. So we'll see what happens with that. We're not in free time. We're in, this is not free time. Free time is me not doing anything. I'm hanging out with all you. That's not free time. I own a couple of bond ETFs, but they're not bond ETFs that you're probably thinking of. I mean, TLT is interesting to me here, but I think you got to hold it for a couple of years. I like the PIMCO Dynamic Income Fund, PDI. It's in my dividend harvesting portfolio. Yeah, I don't know what Burry's talking about. Didn't make sense. Zim is something I stayed away from. I like Dominion. I just don't own it. Robinhood is it's an incredible company. I missed it. Amit tried getting me to invest in it. And I didn't invest in it. So this is what it is. I'm not into STS. Chris tried getting me to invest in it, and I couldn't do it. I didn't see the vision on it. Asian markets rise. That's good. We'll see what happens. What name brand is the button shirt? Brooks Brothers. I don't know much about ServiceNow. Yeah, H200's going to China is very bullish for NVIDIA. I don't know if SoFi is a spec, but I mean, Sentinel-1 could be interesting. I think cybersecurity is going to be a very interesting space over the next couple of years. Salad. Come on now. Yeah, a lot of people ask me about Redwire. I've never really looked into it. Oh, favorite cut of steak? I mean, I'm a porterhouse guy because I like one bone bone in is always awesome, but I mean, porterhouse gives me the best of both worlds because it's got to be a big porterhouse because filet I love. I really like a good ribeye, but I don't want a ribeye with too much fat. I don't want all the marbleization. I like a leaner ribeye. I want the meat. I don't want the fat. Like, give me a freaking gigantic fillet and cook it fiery pink in the middle. I'm just adding to BMNR. I'm in BMNR for a long time. Explodes in the mouth. I'm with you. Fiery pink, red meat. Nothing like a good fillet. Fat is not what makes the steak taste good. Okay, people are so misinformed about that. It's the cut of meat. It's the meat. It's the salt. It's how it's seasoned. It's how it's cooked. Only time I'll rock a flank is if we're doing a steak sandwich. And I will tell you this, I'm a very big fan, or flank or strip, skirt. I'm sorry, skirt. I'm a very big fan of steak teriyaki with peppers and onions. Very big fan of it as a steak sandwich. Very big fan. Oh my God. Okay. I don't judge. All right. If you enjoy being a vegetarian, more power to you. And you should eat however you want to eat. I'm just going to say one thing. We have molars for a reason. That's all I'm going to say. We have molars for a reason. I think the Google TPU thing is overdone. I think NVIDIA is going to be fine. I am getting closer to starting a Broadcom position. Getting closer. I am not a meatloaf person. Man, people texting me, making me laugh. Hilarious. Are they on? Do Cash Flow Chronicles actually happen? Are they on? Give me a sec, everyone. Hold on. We're call Matt Money right now. Give me a sec. All right. Yeah, I don't want you guys reading my lips. Come on. No, I'll let you guys know in a few minutes. So, anyway, where were we? I don't follow Novo Nordisk. I'm sorry. You guys are hilarious. I look like a freaking baseball coach. You guys are hilarious. Oh, Nix, you built your own PC. I will look at it. Thank you, Renee. Really appreciate it. Friday night, so tomorrow night at probably 11, we do a live stream. I did not say tomorrow I'm buying Broadcom. I said I'm getting closer to buying Broadcom, is what I said. I'm getting closer to buying Broadcom. Matt, just let me know when you're going to go live. Take me off and I'll come on in a sec. Let me close out mine. All right, everyone. So actually, we're going to go on Matt's channel for a little bit. Let me get a link to his channel. Give me a sec. All right, everyone. I'm going to go on Matt's channel. If everybody could please follow me over. I'm going to end this stream and head on over to Matt's. You can find it there. I will see you soon. Have a great night, everybody. Really appreciate everybody being here. Love hanging out with everyone.